Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody's doing well. It was one heck of a week, right, everybody? Since I was last with you guys, we had the CPI number, right? And, to sum up the week, really, if you think about it, we had 6 hours of extreme volatility. And literally, the rest of the week was kind of meandering, right? So very, very interesting week. A little bit of a challenging unless you caught some of the, some of the move on on Thursday. Pretty much, it's been just kind of, even today. I mean, we had that drop this morning, and then pretty much for the rest of the day, just kind of meandering about. So let me kind of update you. So first of all, again, give me some thumbs up, put some commentary in the chat so we can grow the channel. Also, if you want to subscribe to the newsletter or attend further classes and so forth, click the link below. Okay. Let me kind of update you on some of the positions that we were in this week. We were I think I mentioned on Tuesday, we were in a SPY volatility play on week with all these different catalysts coming in. And so, we're essentially, today's action kind of gave some of that back. So, it's been a very challenging type environment, as we know, not just for, you can say, well, we just short everything. Well, there hasn't been really great opportunities to short. We are looking to get short the NASDAQ on a rally next week up around the 11,500 level as well. Not a lot to talk about relative to the, the S&P just kind of bouncing around. We did make another new low. But as we know, Thursday's huge reversal kind of undid all that. And we ended up the day really in the S&P kind of, again, in no man's land here, right around this, 3,600, right? So we came down, bounced off of 3,500, rallied yesterday up to 3,730, and kind of ended the day in no man's land. And we don't really have a whole lot of catalysts next week other than the earnings. And banks actually did really well today. Remember, I was mentioning trying to get long JPM. We didn't get down far enough to get long. That stock actually, was one of the better performers. We are also trying to get long XLE, but at a much lower price level as well. So, coming into next week, we got, again, a bunch of earnings coming out. That's really the major catalyst. The stuff in England is also creating havoc here, as we know, but not to the extent that it did anything today to the markets. So we'll have to see how all this plays out next week. It's, again, very tricky environment. Looks like, again, we may get another leg lower next week. And but with the lack of catalyst now, it's all about interest rates, right? So interest rates also had a big reversal. And part of the reason why the market, I think, went right back down again today is because bonds also, the 10-year broke to a new, like, what was it, like since 2008 or whatever, broke the 10-year. I've been talking about this and writing about this. The 10-year did break, what was it? The prior low that we've been talking about here on the 10-year, which was the 111, came down to 110 and bounced hard. And 110 happens to be a monthly accumulation, by the way, on the charts, if you're looking at the 10-year chart. So, not anything changing since our last discussion, right? It's still about interest rates. Inflation is clearly still driving, still up. That's not going to change. Fed's still going to be tightening 75 basis points. Um, and volatility is getting up there, except for today. The VIX still sitting at 32, um, and we are coming towards the end of October with the midterm elections and all that. Seasonally, we're coming out of the worst period in September and October, and coming into the best periods in November and December. Whether, again, that plays out this year is still kind of up for grabs. We don't know that, obviously. Still, things are very, very dicey, and very, very tricky environment. So, just have to basically play